Wow, what a year 2016 has turned out to be. While both the global and local economies have been punctuated with uncertainty, Efficient Group has bucked the trend and once again produced excellent results for the 2016 financial year. No mean feat. We're discussing how Efficient Group managed to do this through revenue growth, asset growth, and improved company reputation. Anton, as Chief Financial Officer, you must be pretty satisfied with the results.
Yes, 2016 definitely turned out to be a year of consolidation and great success for Efficient Group, despite the global economies and local challenges.
It's amazing, isn't it? I think there are a few factors contributing to that, and I think it's good that we as a group celebrate, while you and I talk through how that has come to be.
Agreed, Heiko. We have an excellent team, of course, and I believe what makes our team successful are our values and business philosophy. With these ingrained into each team's member's mind, we strive to meet the needs of all stakeholders. Also, I believe that our aim to remain attuned and responsive to the needs of these groups at all times is vital.
That's true. I think we're firm in our resolve to ensure that relationships with clients and employees are founded on mutual appreciation, trust, and long-lasting partnerships. The focus of every business unit is to create and deliver sustainable, profitable, and efficient solutions. And ultimately, a philosophy as sound as ours is bound to drive success.
I definitely agree with you, Heiko. Now let's go into the nitty-gritty and crunch some numbers here. Shall we take a look at the highlights Efficient Group experienced in the 2016 financial year?
True to form, you all numbers.
Indeed. Although no major acquisitions were concluded during the year, we managed to increase our headline earnings from 29 million rand to 37.5 million, which is no small achievement. Another point worth mentioning is that after various acquisitions were made in 2015, we managed to continue diversification into new markets and segments.
Wow, this is definitely something worth celebrating.
For sure, and there's more. We also managed to increase operating profits by 23% and profits after tax by 28%. It is important to note that most of the growth in profit after tax originates from the increase in operating profits. This means that our core business is healthy.
That's so exciting, Anton. I think that the restructuring Efficient Group done last year also played a role in our financial success. And when I talk about restructuring, I'm referring to the redefining of our 4 clusters into 3: financial services, services and solutions, and investments.
Definitely. There's a lot that can be gained from doing some restructuring according to international trends in entrepreneurship, which aim to empower business units to function independently and be more responsive to market needs. We took it upon ourselves to align our business clusters with these trends, and well, the proof is in the pudding. Although the gross contribution margins for the group remains at the same levels as last year, it is important to note that the investment cluster reported high gross contribution margins due to the higher administration fees and lower variable expenses. Lower gross contribution margins were achieved at the financial services cluster due to the change in the remuneration structure for financial advisors as the group's response to regulatory changes.
I'm glad that everyone's plan has worked out, but now let's talk about some assets. In this regard, the business has grown quite substantially. Let's quickly chat about that.
Yes, it definitely has. To be frank, our assets under administration increased from 63.2 billion to 101.1 billion rand, while our assets under management increased from 18.2 billion rand to 22.3 billion.
And to top it all off, our assets under consulting went up from 24 billion to 26.5 billion, and our assets under advice increased from 12.7 billion to 14.8 billion. The 17% growth in assets under advice is an indicator of the growth in our distribution footprint, one of our key strategies. That's something to celebrate.
But we wouldn't be celebrating if it were not for the team. Our highly skilled team have shown extreme dedication in all that they do. We all share the same passion for what we do, which I believe ties into how the group creates wealth, which increased in 2016 by 8%. Most of this growth was distributed to shareholders and profit share partners.
Our processes also play a major role in creating wealth, protecting capital, reducing costs, minimizing risk, increasing audit and compliance efficiency, streamlining services, and ultimately delivering client satisfaction.
Yes, also the management team of each business unit has the mandate and power to organize operations as it seems fit to ensure sustainability and delivery on its key objectives. The business units are then supported by standardized and centralized processes for finance and compliance.
Wow, I think it's phenomenal. We really do have such an incredible team which has grown a lot in numbers over the last year. This would make you think that the company's costs are astronomically high across the board, but it's actually the complete opposite in some areas.
Having said that, our costs have increased, but this is easily explained. For example, our variable expenses have increased because of the increase in revenue. Fixed expenses increased mainly due to the full year effect of the acquisitions made in the previous financial year.
You're exactly right there, Anton. And as the old saying goes, you have to spend money to make money.
Exactly. And in terms of the profit share and incentive provision, you know that the profit share payment is directly linked to how the assets administration and consulting business units perform. So the increase in this payment is in line with the higher profits that these business units have generated over the past year. The incentive provision has also dropped by 9% since last year.
That makes a lot of sense. Now it's clear from our discussion that Efficient Group and all its employees hold the company's reputation in very high regard.
I agree. Our reputation is incredibly important to us, and this rings true for everyone, no matter what their position is in the company. From the people who have been with us for years to those who are just starting at Efficient Group.
Definitely. And the trust that our clients have in us is a non-negotiable aspect of how we do our business. And to provide all our clients with the best efficient experience possible, we have seen a huge increase in commitment to improving continuously by implementing new technology, diversifying our products and services, and applying practices that have proven to be effective. I think some excellent points to end our conversation on would be to say that in addition to all the other stats we've mentioned here today, we generated cash by operations of 64 million rand. While we've also seen an increase of 49% in tangible assets because of the acquisition of fixed property. The debt to equity ratio increased to 20.7%, which is still considered healthy. And to top it all off, we've seen our return on equity increase by 9% to 16.86%. And we have a dividend distribution of 7 cents per share for the full year. All definite causes for celebration, if I do say so myself. I'd like to take a second to thank you, our clients and shareholders, and tell you that you're extremely important to us. The highs that Efficient Group experienced in the last financial year wouldn't have been possible without each and every one of you. And I think I speak for all of us at Efficient Group when I say that we're looking forward to spending the next year in your service.